2012 is a bit of a disappointing year for initial public offerings. Here to talk about whether 2013 might see a bit of a turnaround is Jeff Corbin, CEO of KCSA Strategic Communications. Jeff, so you talked to deal lawyers about their outlook for companies coming public, volume sectors, things like that. What are they telling you this year?
So we surveyed 50 attorneys, as you said, deal attorneys, that had advised on almost 90% of all of the IPO transactions in 2012. And basically what they said was, well, 1/3 said that it's looking like it's going to be a better year in 2013, and the remaining 2/3 said that it looks like it's going to be flat.
Okay, so what is going to be better about 2013 potentially that they're saying?
They're just saying that there's going to be more deals. I mean, it's really a quantitative thing, and obviously, as attorneys who are advising, it's in their interest to see more deals get done.
And what are the factors that might be driving companies to consider going public more often then?
So certainly what's going on in the economy here. After last night, maybe there's more reason to be optimistic. But then you also have Europe. We really haven't heard too much about what's going on in Europe these days, but certainly the crisis is not over there yet. Just general consumer sentiment and how people feel about their income and whether they're willing to spend or not.
Obviously, 2012 saw Facebook, disappointing on many fronts, the mechanics of the offering, the performance of the stock afterward. What's the sentiment regarding, these big hyped technology or social media names?
So the sentiment is that there is no real sentiment at this point because there's no big blockbusters that are expected or that have been filed at this point.
Right.
The one IPO that we might be hearing from is Twitter.
Yep.
They have not filed as of today. There's a possibility that maybe under the Jobs Act that they filed confidentially. We'll
explain that a little bit. So there's a law passed in 2012 called the Jobs Act, which enables companies to basically keep their filing confidential until very close to their offering?
Exactly. A company that has, I believe it's $1 billion or less in revenue can file confidentially. 3 weeks prior to going on their roadshow, they would have to disclose the information. And I guess there's various reasons why why it's a good thing or why it's maybe not a good thing. Certainly, it's a good thing because you're going to avoid all the hype, like we saw with Facebook. It'll bring greater stability to the markets as a result, and you'll have money that'll come out in a more disciplined way, hopefully. It also allows the companies to kind of pre-market the transaction to see if there's going to be an appetite, what the valuation should be, so that once the deal does come out, it's not at a valuation like we saw with Facebook, where it was a crash and burn.
All right. So, I mean, if you're an investor, you want to anticipate having a new opportunity for a fresh stock on the market. Any particular sectors look like they might be fruitful here?
So, based on the survey, there's 3 sectors that we should keep an eye out this year. In 2013, one would be technology, and not necessarily social media technology, but more traditional technologies, enterprise software solutions. Mobile is expected to be a winner this year in 2013. Healthcare, obviously, because the Obamacare just went into effect, so companies are going to try and take advantage of what opportunities are in healthcare, and then also energy. Just, everyone's going green, so we should probably look out for some IPOs in the energy sector.
All right. Well, we'll see if things pick up a little bit. Thanks a lot, Jeff.
Great. Thanks a lot.